let's get started. Once again, appreciate everyone being here today, and haven't streamed since last week on Tuesday. It's nice to have some time off, just relax, watch some other people stream and do things like that, and just trade, chat, see what's going on with everybody. So today we're going to be talking about a few different things. The first thing we're going to talk about is daily bias. What's up? What's up, Nono Sang? We're going to talk about daily bias and just kind of blaze through all the assets very quickly, because with daily bias, it should be very, very quick. If we're taking too long to figure out a bias, then that should tell you something about the chart. And I'm just curious, you don't have to answer if you don't want to, but today, looking at NQ, if we're looking for bias off the daily, so a daily bias, most people are using internal to external, or maybe they're using 50% candles from the previous day, things like that. I'm not sure what everyone else is doing, but if we're just kind of looking at it, kind of like what we're learning, or what we have learned from Matt, internal, external, external, internal. I'm just curious, what was everyone's bias today? Because when I looked at this today, I had an opinion, and my opinion was actually different than Matt's opinion, which I noticed. I think he was short, but I'll explain to you why I felt the opposite way. And like I said, if you want to pitch in or chime in the chat and say or share what you thought it was, what it would be, that's cool. It just opens up the conversation a little bit more. So this is where we're at the open, right? Here's the close from last night, and this is where we're at. So if you were bullish, I'm assuming you'd be bullish because of maybe price sweeping some sort of a low here, or maybe there was because of this volume imbalance / gap right here. Just going to mark this off like this, right? Maybe you're bullish because of this, and you're looking for an internal to maybe an external move, for a move up here. Something like that. Me, however, I had a different approach. My view is very different today, I think, from what I saw. I'll explain to you what my reasoning was. So one thing I learned with daily bias is to use like the most recent price action. Using stuff from way back like a month or so ago can be valid, of course, but we really want to try to focus on what's happening in the most recent weeks, right? Especially on the daily. So for me, when I was looking at this, I'm just going to remove all that stuff off the left here and just focus on this leg right here. So if we're looking at this leg right here, we notice that there's obviously price sweeping, and then we have some sort of a recovery. So as price is recovering, there's a couple of areas of interest to me. Now I'm just going to hit the rewind button one more time. I just want to show one thing. So I love using these FVG indicators. I'm not sure if you're using one. If you're not, I highly recommend for you to use one. I use this one, Fair Value Gap by Anch. Hunter says, I'm bullish because we inverse the bullish FVG and there's SMT on the highs, but price is failing to reverse, so I expect the SMT to fail. So I'm assuming you mean this right here, this gap. So for me, when I was looking at this, I noticed that we have a SIBI right here. And the one thing that also caught my eye was this volume imbalance right here. I'm just going to mark it off, okay? Volume imbalance. So when we're looking at a volume imbalance, you can see right here we have that FVG that's right here. Okay, we have the FVG. And then price on Monday just rips right through it. That's fine. So this is invalidated now. So we're going to try to use the most recent price action. So we have this volume imbalance. This is bearish. So what that means is if we're looking for like, external to internal or internal to external, depending on how you were, observing the price action, because there was a bullish volume imbalance right here. I'll just put that back on the chart like this. Okay, so we have a move from this volume imbalance, and we're looking for price to probably go back up to the top here, right? Somewhere around 26,032. However, there is a roadblock here, so we have to be mindful that these are primaries of liquidity, and they only become invalidated when price starts to close above these levels. Now, I'm not bringing SMT or anything like that into this mix right this second. Okay, I'm just going to focus on this current leg. So as price starts to move here, let's see what happens the next day. So here's Tuesday, rejection. And then yesterday was Wednesday, and we have another rejection. So 3 days in a row, all this week, have been rejecting off of this volume imbalance. This is telling us that this is a very, very important level. So because of that, this is why I would have actually had a bearish bias today, just simply because of that one little move. If price had actually managed to close above this level with something like a bullish engulfing candlestick or something along those lines, then that would have presumably invalidated this bearish volume imbalance, and then we could have looked for a move higher. However, 3 days in a row of rejection, I would be looking for a move now lower until this is invalidated. Can you use volume imbalances as an IRL? 100% you can. 100%. I mean, you don't need to take it from me. Just look at what price does at specific levels of interest. If price is respecting something like a volume imbalance, then we have to react to what price is doing. I'm not trying to predict, and neither should you, but react to what the price is doing. All we can do is observe these levels of interest, right? We use our ICT concepts in our favor, right? So what does that mean? It means, we mark our levels daily. This is a daily buy side liquidity. Here's the daily sell side liquidity. Here's what's in the middle, a volume imbalance. That's bearish. There was already a bearish FVG right here that was already invalidated, right, with this candlestick. So all we can do is wait for reactions. So if we're looking at, once again, the daily bias, to me, I would have had a bearish higher time frame bias today just simply because of this one little thing. Okay, so that's NQ. Anyone have any questions about that? And if we go into any sort of lower time frame, like the aligning, let's say we use an hourly aligning time frame. Here's Thursday right here, right? You can see all the rejections. More common pattern that you see right here is, it's actually kind of interesting, but you have a left shoulder, you have the head, and you have a right shoulder. And anyone who's studied any sort of retail patterns, I'm sure you have, because we all started there, that's a typical head and shoulders, right? It's a bearish head and shoulders. And then here's your follow through. So get rid of this. Okay, so if we're on the hourly now, here is 8 a.m. and then here's 9 a.m., right? So in between 9 and 10, that's where that dump happened. The thing is, just because we're bearish, sometimes we can't actually find some sort of a move to get into, right? So if I label here some hourly buy side liquidity, let's just go to the aligning 5 for a second. Now what's really, really interesting at open is price has already rejected. Remember, 8:30 we had news, right? That's right here, unemployment claims. Look at where price rejects from. EQ of the volume imbalance. And if you've watched my live streams in the past, every live stream I always talk about, the EQ, or in ICT it's known as the CE, or you could call it the 50% level of a range. But look at how perfectly it tags it and then immediately goes the other way. I think this is really important to take note of, because this happens all the time. So 840 rejection, price starts to dip lower. Now here's 930, right? And so at 930 we got about 15 minutes of wiki action that happens. Usually when we start the session, it's good to kind of wait, let price breathe a bit. before doing anything. But one thing I did notice was this breaker block right here. And I also noticed this FVG right here. The problem is, and I mentioned this in the past many, many times, that the problem I used to have with trading off the 5 minute was, you get such great alignment, daily bias bearish, hourly market structure aligned, right? So even with what you saw here, on the lower time frame, you get the unicorn setup, and it's not the greatest setup in the sense of, how we would like for it to look, I guess, in terms of how many candles per se, or just the distance the candles have moved. But this is still a unicorn in my opinion. So here's the displacement candle. But the problem now is that the third candlestick that confirms the actual move, or the lower time frame entry trigger, which is a unicorn model, it leaves you high and dry. Like, it's already gone without you. So if we're using daily, hourly, 5 minute, this is how I would have looked at it. If we start using, different time frame alignments, let's say we're using the 4 hour time frame to the 50 minute to the 1 minute. Let's take a look at what that would have looked like. So here's the 4 hour. I mean, we'd still be bearish because we know that there's a volume imbalance here, but right here is a 4 hour buy side level liquidity. So we would be looking for, a move from external to internal, right? Go to the 50 minute for alignment. 8:30. Here is 9:30. So at 9:30, once again, we have a 15 minute buy side liquidity level that's taken out right here. And then if we go to the 1 minute, let's find 9:30. 9:30 is right about here. What is this for a second? Hold on. What did I put in here? Oh, let me get rid of that. That was an accident. Okay, let's go to the hourly. So we know the higher time frame is bearish. The 15 minute is also bearish. Right here is now the 1 minute. So what could we be looking for on the 1 minute? Well, this is where it gets tricky, right? Because when we're looking at this block of price action, I mean, this is really, really ugly, right? You don't want to really be stepping in the way of this. And this is part of the problem when it comes to trading, is sometimes you just have to sit on your hands and do nothing, because this is not really A plus price action. And it doesn't matter what model you're trading. This is ugly, right? This is a disaster. You don't want to be stuck with this. You need to wait for price to do something very smooth like this, right? You want clean price action that tells us a story. This does not tell us anything. Henry asks, how do you use the hourly? Do you only use it as a POI time frame, or do you look for something else also? So what I'm showing you right here is more of an analysis piece, not so much exactly how I trade. I'll go over that in a sec, but I just wanted to show you the analysis side, just to get everybody thinking. Maybe there's something that you didn't see that maybe you're seeing now, or maybe you already knew all this stuff, and that's perfectly fine. I'm just giving you some more confirmation of things that you also saw. So we're basically seeing the same thing, right? But this is how I would have observed that price action if I was using higher time frame alignment with market structure alignment with lower time frame alignment. This is kind of what I'd be doing. So the problem now is that price then just dumps aggressively. And if you have a bearish bias, there's not much you can really do, right? If you're trying to take some sort of a bearish move, because price just continued to just dive, right? And that was a pretty darn aggressive move, if I must say. Let me see what the measurement was on this. Let's just take it to about here. 586 points. Unbelievable move. I don't even know what news caused that. Usually we see news that usually, the news drops, but the price is already dumped, but we can kind of go back and see what it was. I was looking at Financial Juice. I couldn't find anything. I saw some stuff about Putin and Trump with, going back to like a dollar standard, but that was, I didn't even take that news as being like bearish per se, because it was just like a memo. So I have no idea. Maybe it was the stock market that pulled it down, right? Maybe the tech industry was going down. I'm not sure. Maybe if someone knows, feel free to let us know. So yeah, that's NQ. Let's jump over to the next asset. Let me double check my list. Okay, let's take a look at silver. Let's go to the daily. Let's take a look at silver. So if we're looking at silver, once again, it's the same thing, right? Yeah, I know that we had a massive, price action that just like literally dumped after we had such a, amazing run. But what are we looking at in terms of price at this point? It's really interesting because once again, we have these IRLs that are coming into play. There's a sweep down here, right? So internal to external right here, and then we get a sweep higher, right? So as price is sweeping higher, we could show that there is, right, a bullish FEG here, right? Or sorry, not a bullish FEG, a bearish FEG. Excuse me. Okay, there we go, right? So as price moves into this, we can then start to observe how price is moving, right? So none of this would really give me confidence that, we're still moving higher. And I think with a lot of the liquidity that's up here, I mean, it could still go higher. Who knows? I think the thing I'm looking at now with silver is how price reacts once again with a volume imbalance right here. We have a bullish volume imbalance. Now, right now, there's about 3 hours and 39 minutes left to go in the daily candle. I'd be really curious to see how price reacts to this volume imbalance, because if it can close back inside of here, maybe it respects the 50% level of it, then maybe that gives price more momentum to go higher. However, looking at it on the hourly, we can already see it's already started to close underneath. The previous hour has rejected. So is this going to be one of those situations where we're getting like an underside sweep and then it's going to go like this? Or are we seeing like manipulation forming, right? And then we're going to get something like this. Hard to tell right now because price is still kind of sorting things out. But that's kind of what I saw with SI today. I was just looking at it and I thought, oh, that volume imbalance is interesting. Let's see how it holds up. Depending on how things were, I would have had a bullish bias today on silver. But, the problem with this is price doesn't actually end up hitting that volume imbalance until about noon. What's up, brother? So anything prior to that would then mean that, you'd actually be bearish, right? Up until price gets there. And the reason you'd be bearish up until that point is because we do have a liquidity sweep. It's very, 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 very slight. It's right there. We do have a liquidity sweep right there. And if we go back to the hourly, you can see what I'm talking about. Right here is the volume imbalance, right? Or sorry, the buy side liquidity sweep. So anything from here to here is still technically bearish. Anything once it enters here is bullish. So I know I said a bullish bias, but that's only because I'm looking at that volume imbalance. Prior to that, I guess you would say you were bearish just because the day started off up here. I thought actually we ended up hitting the volume imbalance earlier in the session, but it looks like it ended up hitting it later. So anything up here would be considered bearish territory. So that's SI. Let's take a look at gold. Now, I know with gold and other commodities, it's been tough to trade because a lot of the prop firms have said, we're not going to be trading them because of the volatility. Once again, GC is no different. There's another volume imbalance right here. Seems like the moral of the story. Let's put that in. Volume imbalance right there. We know that there is a liquidity sweep right here. Let's mark that off daily, buy side liquidity. And there's also a very, very slight FEG that just got mitigated on Wednesday fully, right? So this whole FEG that's here finally gets mitigated right about there. And let's go to the hourly, just observe what price was doing, because I'm not sure when it hit the volume imbalance. It might have been just like silver, yeah, around 11. There was that aggressive dump that happened. So, you're having a bearish bias to start the morning. And then once it reaches that volume imbalance, the objective of the bearishness is gone, right? Because now we're already starting to move into bullish POIs of interest. And the way this is closing, it doesn't look like it's going to rebound and reclaim this level at this point on the hourly. So that's the bias I would have set in terms of analysis for SI and GC. Let's take a look at CL. I'm not sure if anyone trades oil, but let's just take a look at it. And I think it's also like a really good exercise to just do this for yourself, even though you might not use these methods or you might not specifically trade an asset. I think it's super important to practice this because it's a form of study. And, the more time you get your eyes on the chart, the better off you're going to be in the long run, right? Because you're training your eyes. CL has been a little slow lately. I think there was some news about CL today, if I'm not mistaken. I could be wrong. But if I was looking at bias, we, on Thursday in January, it was a Thursday on January 29th, we got that massive sweep that occurs. Takes out a September high from 2025. And then after that happens, price moves, starts closing through these volume imbalances and this bullish FEG. We push higher. You'll see another volume imbalance here. It's actually kind of funny. If you look at this, there is volume imbalances, one here, then another one's formed here. This is wild. But you can see it's just ping-ponging off these levels. So if this is a bullish volume imbalance, price then sweeps a swing high that was set on February 4th. So looking at today's price action, I would be bearish because I'm looking for a move now from external to at least some other form of external sell-side liquidity. So if we go to the hourly and take a look at what the hourly look like, this sweep occurs Wednesday during the New York kill zone. And here is, this is London time on Thursday, and then here's about 9 a.m. So price has literally just been dumping since open. And if we go to the 5-minute, just so we can see what we're looking at, make a line here for 9:30. Actually, I'll make a line for 9 because I think futures starts around 9 for CL. Still not a bad move. Maybe there was something there as price opened and then moved into some sort of a 50% retracement. I'm not sure what type of entry you would have used. Obviously, there's no real... is there a unicorn? Let me go back to the hourly for a sec. Okay, so if I'm looking at the hourly, we have that... whoops, excuse me. Let's just get this out of the way. All right, so hourly, we have that FEG right here that price is rejecting off of. If we go to the 5-minute, maybe there was something there. I don't know. I'm not sure if it was clean. So here's 6:30. There's a breaker block here. We don't get another sweep here. So technically, this would have been a nice breaker block. A lot of consolidation though, but you do still get one of those messy types of unicorn models that forms, right? Price then sweeps, comes back to the breaker block, tags the, once again, really, really super interesting. Look at this. I don't know if you can see this. Let me see if I can change my colors. Style, middle, let's make this white. At 9:10, price comes back into the breaker block and tags the CE or EQ or 50% of the breaker block. Ping. And then instant dumping. So, not sure if this would have been a valid setup or something you would want to risk, just given the way this all looked, and it was also pre-session. But nonetheless, you can see how price is respecting those bearish concepts, right? As we move from the higher time frame to the MTF and then to the lower time frame. And that's the whole point of why I'm doing this, is I just wanted to just kind of walk everybody through just some higher time frame analysis, moving into the lower time frames, just so you can observe what price is doing and see how it is respecting those ICT concepts. Because I think the beauty with ICT concepts is that it has, even though it's repackaged like older information or whatnot, it has consolidated a lot of it and made it much more digestible and user-friendly for people like us who are, I guess you could say the new generation of trading. Like, we have beautiful tools with TradingView, there's tons of indicators. Our tools down here are just way more robust than they used to be. Exactly. Yeah, there's a million ways to trade, but we all kind of have to find our own way for sure. But one thing I've learned is these ICT concepts are just unbelievable. I would not have known about any of these things had it not been for ICT in that sense. And sure, it was a struggle to learn from ICT himself, but that's what Matt was here for, right? Matt has put a lot of this into perspective, and then through Matt, that's opened doors for me to understand other more advanced traders, right? That are doing a little bit more intricate things with different types of concepts, right? People like T-Trades comes to mind, right? T-Trades comes to mind, AM Trades comes to mind, Day Trading Realtor comes to mind, and there's a whole bunch of other people too, right? That I haven't listed that are equally of importance. Let's take a look at 6E, which is also EU. I'm not sure if anyone's trading EU. I do trade EU on a CFD prop firm. But nonetheless, just take a look at it. So my daily bias today, very simple, right? This is super simple. But, part of the problem is when you have these like overlapping POIs, right? Like price move from a liquidity sweep here, which is fine, moves into the bearish SIBI, fine, but then price then moves into another POI. Oops, let's move this up a little higher, and this, I'll just mark this off as an FVG, right? So this is the daily. Price is now sitting at the 50% line of the daily FVG. Let's mark that off like this, okay? And there's the CE right there in the middle. Price is really respecting this. Now, what's really interesting too is from a retail concept perspective, you have a shoulder, you have a head, and another shoulder, and then here's your shoulder line, right? Oops. So it'll be interesting to see now, is price going to come back up like this and move higher on 6E? Or is it going to reject, is it going to like invalidate that daily bullish FVG? So I would technically be bullish today on 6E or EU just simply because of this off the daily. But once again, this is just analysis. I think it's very healthy. I'll say this again. I think it's very healthy to go through all these assets and just practice going from the daily, practice moving to the hourly, practice moving to the 5-minute. Even though I don't personally trade that way, it's still very valuable to just get those kind of reps in. It's no different than someone that goes to the gym, and sure, they can lift 50-pound dumbbells, but maybe in between sets of doing other exercises, they're using like a 10-pound dumbbell and just like, smashing out like 10 to 20 curls, right? Just to kind of get the reps in, right? It's that type of mentality. And that's kind of, I feel a lot with when it comes to trading. Just take a look at the chat. 17's been gracious enough to share a chart from his view. Aim for a higher RR with the unicorn. Looks like that was the S&P 500 he shared. Yeah, I didn't actually cover ES, but ES and NQ move very, very similar. So, what time frame do you got there, bro? Is that the 1 minute? Yeah, I will say the market hasn't exactly been on easy mode per se. It's really tested our patience, and it's really tested our conviction in the setups we take, because I found that the market has been trying to almost make you trade off of your game plan. And it's obviously not doing it, for any sort of reason per se. It's just interesting seeing what price is doing, because it has been doing that to me. It's been really testing my patience, where it's like almost like teasing me with a setup before liquidity level's been swept. But it has swept on, say, ES or something like that. And then there's SMT. So it's like, what do you do in those situations, right? All right, so we're going to move into the next thing. 50-minute Sibi. Yeah, I think we already went over that too for sure. This is 9, not so much a Sibi. I think I had marked off a 50-minute buy side liquidity level, but then you can see right here, probably this is what you're talking about, 10, right? We moved into this bearish FEG. Maybe that's what you're talking about. And then let's go to the 1 minute. Maybe I think that's what you were showing, anyways. Not bad. I mean, if you're looking at this in terms of like a market maker model, you know, you got your reversal, and after the reversal, usually what happens is you get that first leg of consolidation, and then price moves lower, right, to create that next level of consolidation, which is right here. So we could be anticipating a reversal at some point, I would think. I mean, that was a pretty nasty drop. Yeah, I know you're on ES. I just wanted to see on NQ just because I didn't take a closer look. I was just kind of curious for myself, so. Took midnight key open, retraced after tapping into the 50-minute. Yeah, where is the midnight open? I don't have that level marked. Looks like right there it was midnight. It's holding some support there until it broke down initially or eventually. If anyone has any questions, feel free to drop in the chat. No stress. Next thing we're going to talk about is the 20 A+ trades challenge. So we started this thing on the 15th, I believe, of January. We got a lot of people actually participating. I'm really curious to know what people think about this, that are participating, what they've noticed. 218 entries from daily check-ins, 112 trade proof entries. We'll get into mission accomplished in a sec. In terms of the sign-up process, I see about 36 entries. Doesn't mean there's 36 people that joined, but I know there's a few of us that had to restart. I know myself, I think I was the first one that had to restart, which is kind of funny. But I had to restart, and then I never looked back. But I'm sure there's probably a couple other people that had to restart. But I mean, truth be told, I put this open to everybody who's in this community. There's like, how many people are in this community? There's like, I don't even know. It's like 8,000 people in this thing, and only like 30 plus people joined. Interesting. But it's also a bit telling, there's, not everybody's willing to put themselves to, the limits. Not everyone's able to for X and Y, Z reasons, right? I'm not judging, just saying that is what it is. Yeah, let's get to mission accomplished. So I mentioned at the start last month that whenever you start a challenge like this, everyone's timeline is going to be different. And the reason being is that we are all trading, very differently from one another. Like I trade IFEG models. Maybe you're trading a unicorn. Maybe someone else is trading like an order block entry. And then also in terms of the time frame that you're executing on. If you're executing on the 5-minute time frame, you're not going to hit 20 trades until like later this year, I would think. Just given how many opportunities there are, right? If you're trading on the 1-minute time frame, the opportunities are there for you. You might take more losses. You might have more opportunities, of course. The other side to that too is maybe you're trading multiple assets to get to 20. For me personally, I managed to get to 20 trades as of yesterday. I did get to 20 trades on a loss, which is it is what it is, but it was a valid loss. We're going to go over some of these trades in a sec, but I did complete it. I'm happy about it. If you want to check it out, go check it out. If you just kind of, even go into the if you go into Trade Proof and just search my name and then search, what could you search? You could search like trade number, for instance. Just put trade and then the number sign. You should see all of my entries there. But yeah, I was able to finish it. Didn't end with a winner, but that's okay. That's not the whole point of it. The whole point was, can I execute 20 trades that fit my model and my plan and my system in a row? Now I'm taking multiple trades in a day, sometimes anywhere between 2 and 4. So I'm able to kind of potentially hit that level, obviously much faster than anyone else, but nonetheless was able to finish it. And some lessons I learned, don't trade on the 5-minute time frame, right? Or also like to not front run my entries when I'm on the 2-minute or 3-minute. I usually front run sometimes if I have to on the 1-minute. I have expressed how I do that in other videos or other live streams. My favorite trade probably would have been, when I just took a quick look, I thought number 18 looked the best. I did put a link to it so you could see it. My biggest improvement when I was looking back over the month, I think what I've done is really like tamed the greed that comes with trying to nail home runs. And I just aimed at taking profit aggressively, playing a good defense, meaning moving my stop loss to break even, when I see, NQ, running 20 to 30 points and not taking any sort of chances. Yeah, sometimes I got stopped out and then price went the other way. But other times it saved me from massive losses. So there's always another trade around the corner. I'm not going to fret about it. My next goal, though, when I look back through my notes, I think the one big thing that I want to change or work on is to tighten up the way my stop loss is placed, like where it's placed. I think I've been very generous in terms of where I place it. So I've been just giving myself an extra cushion, so to speak, like just where, like if I wanted to say put my stop loss at 25 points, I would move it to 30 to 35 points, for example, just for some, maybe it's a market structure reason, but like that extra 10 points is a huge difference when you're skimming profit at, TP1 or TP2. And that's the difference. So I could actually squeeze out more, and some of the best trades I take don't even go below the IFEG. So let's talk about that for a sec. So I'm just going to go to NQ. Let me delete everything that I did here, and let me go through my notes and double check some of the trades I took from last week, because I took a whole lot of trades. Let's start with, why don't we start with today, actually? So let's see here. Let's back out of this. And let's talk about today, because there was a setup I took today. Let me mark it to about 11. So the trade I took today was right around here. And I was really, really hunting for a reversal. And as you can see with price, we dumped obviously through London low. The daily EQ is right here. So I'm not looking for longs up here. I'm looking for shorts. That's how I form my daily bias. I base it off the daily EQ. Price then starts to go lower. We hit Asia low. Okay, perfect. Asia low is another huge liquidity level for me to work a trade off of. But when I was looking at the price action, there was just no FEGs for me to work with that would turn into IFEGs or maybe even a BPR, right? And then we started to dump lower. There's an hourly sell-side liquidity level right here. And I'm watching what price is doing. And I'm unsure as to what it will do. So I have to just wait and react, right? It's not about predicting. It's about reacting. And, understanding what your checklist is. For me, my checklist is obviously the kill zone. I want to see a major liquidity sweep. Are we on the right side of premium and discount? Instant reaction means, do I see price form like a V, right? In terms of that reaction to the higher time frame level. And then strong momentum is where the V then forms. Am I getting a clean, smooth move through the FEG, creating an IFEG? Am I seeing something like that? And then, of course, drawn liquidity, right? Because if you don't have a drawn liquidity, you don't have a trade. So you always have to, price has to always be reaching for something. Otherwise, what's the point of taking the trade? And if the drawn liquidity is not very good, then you need to really question taking the trade in the first place. So this trade I took on the 1 minute time frame, and I was eyeing this, and we'll just hit play. You can see it rejected here, okay? And then you'll notice that this indicator I used, printed or marked up another signal. I avoided this. This is not the type of IFVG I would play. That's not V-shape for me. Like, I need to play right off the sweep, and we didn't get it on this move that occurred from here to here. So because of that, I wanted to see now another sweep. And if I saw another sweep, then I would look to play a potential next setup. So price then starts to do this. Here's your FVG. So I marked this off as such. Here we go. And all I'm looking for at this point then is for price to show me something. And sure enough, it's just showing me consolidation, but I stuck with it, right? We still have that liquidity sweep, which I talked about right here, which is really nice to see. It gave me some confluence to the setup. It was holding. In terms of like what I was looking for in terms of that drawn liquidity, well, we're below the daily EQ. We're a good distance away. We have LR all over here. So my TPs are just literally up here, and then, taking, depending on what happens up here, this would be a place where I would have taken majority of my of the trade-off. Let's just keep going forward. Okay, so right here, this is where I was watching this, and I wanted to. Now, we talked about the front running, right? How I don't want to front run entries that are on the 2 minute or the 3 minute. I will only front run them on the 1 minute. And how do I do that? Well, when we're looking on the right side of our screen, there's a timer, and I'm on the 1 minute. So as price is like ticking down, right, from 50 seconds to 40 seconds to 30 seconds, I was really observing what price is doing. And what happened was when we got by about 20 seconds, price was already way too high for me to just jump in. So I just kind of waited to see what would happen next, because I thought if I missed it, I missed it. But if I didn't miss it, then that's a good sign. So I had some levels marked off. I had that level marked off for myself. I had this level marked off, and then I had a level higher up here marked off in terms of like those TPs. Right? You got to always know where your TPs are. I think I actually had this level too. So I had some levels lined up. My goal basically was if I saw price get somewhere in here, I would take off, a chunk off that trade. I would take way more of a chunk off that trade up here, and then even here would be like majority of the trade would be taken off, and then runners, right? Just in case price decided to go much further. That's usually the plan. That's what I always do. So within this candlestick, I wasn't able to catch a trade. Like, I wasn't able to jump in where I wanted to, and I did hesitate. I probably could have got somewhere around here, but then I thought, okay, let me just wait, because this is part of the thing I was talking about, where the market's really been testing me and kind of forcing me to do things that are outside of what I should be doing. So because I didn't enter here, what I told myself was, if we sweep any sort of liquidity up here, I'm not going to take the trade. If we do not sweep any sort of liquidity, then I will enter the trade. So let's take a look at what happens next. Okay, so you get a candle like this. Now, you're just seeing it obviously in replay mode, but in real time, when price started to wick lower, this is where I dollar cost averaged into my entry. The problem was when I hit the buy button, it kind of triggered me an entry up here, not so much down here, because it happened really fast. So I then thought, okay, well, it was a dollar cost entry, like dollar cost average entry. I still have more contracts that I can deploy. Let me wait and see what happens. Then we get one of these, and when price did this, I thought, okay, well, we've already taken out some liquidity, but my entry is too high, and this is not even 20 points at this point from where I took that entry. So I waited to see what would happen next, and then we got one of these. When I saw this, I instantly bought the remaining pieces of the trade in terms of like my position side. I became full size at this point. And was it risky? 100% it's risky, because it did what I was already in the trade, but it had already taken out this level here. But this is the key level I was really looking for. Somewhere, up here was where I was hoping to take some TP. So I'm in the trade full, and then we get one of these. We get one of those. My stop loss in this trade is probably right around here, okay? So if I were setting this up, my entry was at 25,223 was my dollar cost average entry when I went back on just on my chart. Okay, so like that, and then my stop loss was at, I think it was 182.25. 20. Oh, it was 75. Okay, there it is. So, seeing where we were here, I wanted to see price come around somewhere around here. The RR is not the greatest, of course, because it's just the first part. I was aiming for something like here, right? And then we get one of those. I'm still in the trade. I have a hard stop loss here. I got to let price do what it's going to do. And this is part of what I was saying with the patience side of this, because if you have conviction in the setup that you're trading, don't hit the eject button until, you know, price gives you a reason to hit the eject button, right? So like I was waiting to see how price would react to the IFEG, because I know the best trades don't close below IFEGs once they're formed. And if they do start closing below it, that's not a good sign. This case, the IFEG held support, price booms up higher. I instantly start taking a lot of TP up here because of what happened here. I just didn't like what I saw, and I instantly took a good chunk of TP here. I'd probably say about 50% of my position, right? So that was about maybe like 30 points or so, we'll say. The moment people back out of their trades is when price rips to take TP straight after. Yeah, I mean, the market is a game of buying and selling. And if I'm buying, then someone obviously is selling. And if someone's selling, then someone is buying. And that's going to push that price higher. And it looks like that's what happened, right? It did instantly here. I took TP, instantly moved my stop loss to break even. And then price dumps me out right here on the next candle. And this is how fast things go with IFEGs in terms of how I trade on the 1 minute, right? I got into this trade in this block here, but it only took 1 minute, less than 1 minute for me to be in and out of a trade, really. And I caught my 50% move of the position I was in, and that was it. That was my base hit today, right? And then I was just waiting to see what price would do next. And the thing is, all you can do is wait to see how price reacts and be patient. So like as I'm watching price continue to move, right, this is why I have my stop loss at break even. I mentioned how in other trades, it would take me out and then go higher, but in other cases it would actually hit my TP, go to break even, tag me out, and then go even lower, right? So this is why I like to use a more aggressive stop loss in terms of that system. So as price goes a little bit lower, and the only reason I'm showing this is just because even though I have these levels marked, just because I have them marked doesn't mean a trade's going to form there, right? It doesn't mean anything. Okay, so we can never take these things for granted. Price will do whatever it wants, as Matt says, whatever it wants, whenever it wants. All we can do is react and then wait for our entry triggers to form to get into those trades, whether it's an IFEG, whether it's a unicorn model, whether it's something completely different. If you don't wait for your system to show, then you're either going to put yourself on the wrong side of the trade because you're breaking a rule, or you're going to basically like put yourself in a position where you enter the trade and everything checks out and maybe it still goes to loss, right? Or maybe you break some sort of rule in terms of your profit taking or whatever that system is, and then you pay for it later, right? So for example, in the past, I would get greedy. I talked about the greed with what I learned over the past 20 trades that I did with the 28 plus trade challenge, that like sometimes I would get greedy because I would think, like this is not enough. Like I want price to go here. But the key words I use there, I want, right? That alone tells you it's not going to work, right? We can't want anything. What's up, Iman? So took the TP off, let the price do what it's going to do. And, that's basically how the day went. It was just a pretty boring day in that way. But I guess I just wanted to start off with that trade. And then since then, here we are now. So let's take a look at another trade. Does anyone have any questions, by the way? If anyone does, feel free to note it. Appreciate everyone's time, by the way. Hope everyone is having a good day. Did anyone take any trades today out of curiosity? Like, did anyone catch any shorts or anything? 17 says, yep, retraced 3 points off the stop loss for me, then went 4.5 RR. Okay, let's take a look at another trade. You know what? Actually, here's an example of a trade I took that was a loss. And this was yesterday. Yesterday actually sucked. I'm not going to lie. Yesterday was really, really bad. I say really bad. I did end up the day red, but I was able to... Like if I was to say, you know, a red day would be like a -1 or say a -2. I managed to get to about -7.9 RR in terms of that risk that I would use. So I made back that loss, but I'll show you where that loss was. So there was 2 trades. There was a win and a loss. The first one was a loss. Second one was a partial win. I wasn't able to secure much profit as much as I would have wanted to. And this is kind of where I talked about that stop loss placement, right? So let me just go back to Wednesday. Let's go back to around... let's go right to open, actually. Then we'll do the next part. So one setup that I often use, and you'll notice we have NFP and we have CPI, and these print very, very massive news candles, right? Sometimes they're like 80 points, sometimes they're 100 points, sometimes they're more. But these candlesticks, while we can use them to take a trade, say with, you know, one shot, one kill, I also play off the data highs and the data lows of the candle. And I learned this method of trading, and is quite valuable. I just want to double check one thing on my side just to make sure. Time frame. Okay. So the setup would have been right here, actually. Now, forget what the indicator is doing for a sec. Just going to adjust this, show it as a single. Maybe that changed. Yeah, it does. Okay, perfect. So what I was doing was I was looking at this right here. Okay. Now the reason this put this originally as a series is just because there's a massive FVG here. But the goal for me, and this is 8:30. This is Wednesday. This is NFP. So here's your data high, and this is what I do. I push the data high there, and I put the data low here. And while I didn't like how the data low formed, like it didn't create some sort of like wick, like a liquidity sweep that then shows us the liquidity, it did leave all this here, right? Would have preferred for something a little bit more spiking. But nonetheless, the plan was to take the short from here and then aggressively take TP down in this area here. Okay, so you can see it's starting to form. We've swept Asia high. We've swept the data high. I'm waiting for an entry. Here's your entry, right? Now, my stop loss I had placed way up here. It's about 26.75 points, so that's not entirely too bad. The only reason I placed it up here was just given the volatility. You know, I didn't want to place it up here to have a 40-point stop loss, so I just placed it here. It was pretty standard. And also the size of the FVG matters, right? So this IFVG was only 8 points. So usually when the IFVG is on the smaller side, you know, I will put my stop loss a little bit further away because price can just literally wick right through the IFVG in no time, especially with the way NQ's candles have been printing. They've been very massive. So nonetheless, I was looking for something like this. You know, it would have been about a 2.6 R move, 69.5 points. To the data lows, about almost 90. But, you know, I've taken this trade many times. Unfortunately, this time I took the trade, and in 3 minutes, 1, 2, 3, I'm stop loss. So that's how my morning started, with a stop loss. I've taken that trade many times. I'll keep taking it. It's part of the system that I do, and it is what it is. So what happens next? Let's just fast forward. Okay, so here's our high of the day. Previous daily highs right here. We're getting some SMT. That's fine. My next trade actually did not come anywhere here. I just could not find anything that worked for me. So that means I have to wait. I have to wait for sell side liquidity levels to, you know, form. And if they don't form, then there's nothing to do. Okay, so let's keep watching what happens. Sorry, my other screen's going wild. Let me just, what the hell's going on here? Okay, so at about 10, what time would it have been? 10:36. This would have been on the 3-minute time frame. I guess this is a good lesson to learn on how to use different time frames on the lower time frame to find a more clean and clear move. Okay, so what does that mean? Well, right here we have a hourly sell side liquidity level that gets swept. If we go to the 15-minute, I also noted that there was a FEG. Now, while I don't use FEGs 100% to like formulate a trade, I do like to look at it for confluence. So if I do see something like that there, because like price has to always move off something, there's got to be a reason. So when I saw price really sweep this level, I thought, well, that really swept that swing low there. Is there another reason why price moved from this area? And then I found that 50-minute FEG. So perfect. The problem now when I go to the 1 minute is we're hitting all the good levels, but there's no FEGs to work with. So when I start to see a lot of choppiness like this, I'll just move up a time frame. So here's the 2 minute, still not seeing anything I like, right? There's nothing to work with. Move to the 3 minute. And when I go to the 3 minute now, things are a lot cleaner. But the problem with the 3 minute is there's an FEG here, there's an FEG here, so it's not like the best setup. But if I could get an entry lower here, then that means my drawn liquidity is further away in terms of that TP1. So what I ended up doing was I entered this trade. My stop loss, this is part of the problem with the stop loss placement. I keep talking about it. My stop loss was way too big. Way too big. I think it was about here. So 46.75 points. I had placed it way down here. If my first TP is around here, 44.5 points, almost 1 hour move. If this was placed even just like here or a little bit higher, the RR increases exponentially, which then means if I take like 30 to 40% off the trade, that's I'm hitting those daily numbers that I like to hit, right, in terms of my target. So price does end up hitting TP1, as you can see, right? Here's TP1. Okay, TP1 gets hit. When TP1 gets hit, my stop loss goes to break even, and guess what happens? It stops me out, right? However, just because it stopped me out doesn't mean I'm done with the trade. I'm just double checking my notes to make sure I got the right part of the setup here. So just a heads up. So when I entered on this candle right here, let me move this over for a sec. When I entered on this candle here, this candlestick, for some reason, it looks like I'm just looking at my chart, but it looks like I actually somehow skim profit up here. I think I might have taken a small skim, and then my stop loss got taken out at break even around here. And then on the next candlestick, I noticed price was looking still pretty bullish, and I thought I got taken out like prematurely, so I entered back in again, second entry, except this time I took the TP right up here, and then this is where I got stopped out break even again. Okay, so 2 break evens after taking TP1 2 times in a way. This TP1 wasn't really TP1. I think I got a little bit nervous, to be honest with you, and I just took something off. And I probably shouldn't have, but because if I didn't take that, then I would have still been in position, and then I would have just caught this. It would have been one single trade. However, because I did take a little bit off and I moved my stop loss to break even, it forced me to then take that second trade. So this should have just been one trade, but nonetheless, the same end result, right? TP1 hits, price goes to stop loss. But here's the thing. This is what I said earlier. Sometimes it works for me and sometimes it works against me. And if we look at what happens next, this actually worked against me. Because the setup that I wanted, right, to the daily EQ, I'll move my stop loss back to where it was, 2.38 move, right? I would have eventually got stopped out anyways, even if I had taken, say, I would have probably taken about 80% off the trade around here, maybe more, and then my stop loss would have been at break even. I would have got tagged out, and then price would have gone higher, but that's fine. Like, I mean, I would have hit my daily goal at this point, would have gone way over actually. But this is how I would have set that trade up, and what was going on through my mind. And like I said, I made one little mistake here in hindsight, but the trade nonetheless still would have done the same thing. It would have still taken me out break even after TP1. It's just looking at it in hindsight, and you're seeing what price does. This is what it does. Like, price is going to do stuff like this, right? It's gonna take you out sometimes and then continue higher. But the reason I play that defense so aggressively is just to keep myself safe, right? Iman's taking trades in the toilet. Amazing. That's the beauty of trading on your phone, eh? Oh my goodness. That was a nice setup actually on MGC. Let's just take a look at that actually. What time frame was that? 2-minute time frame. Don't mind my IFEG indicator. So it looks like you took it from here. This move right here. Just kind of curious if I change this to automatic. Will it line it up for me? Nope. Risky trade, man. Taking shorts like that. But continuation, I guess, maybe of some sorts. But that was really tricky, bro. I would not have risked that. And you're taking trades at 2 in the afternoon too on GC. Wow. Takes a special type of person to do that, man. Does anyone have any other questions or anything, or want me to look at anything? Feel free to put it in the chat. So I've gone through a few trades already. See if I can find another one. Seeing one. Okay, you know what I'll do? I'll show one more from. Let's go back to the 5th actually. Okay, let me close all this off. Let's go to the 5th. This trade happened at 9:55, so let's go to 9:55. 5th. Okay. Mr. Coco, what are my thoughts on BTC long term? Yeah, we're going to go over that after this. 100%. I wanted to talk about that actually. So the setup that I took on the 5th is another type of setup that I often talk about, where I use the daily EQ as an SR level, and the SR meaning support and resistance. Yeah, we can look at the current price action, sure. So why did I take this trade right here, this move right here? So when price hits the daily EQ, I'm looking for reactions off that level. I'm looking to see, is it holding it as resistance because we're going from the underside? And if it is there an FEG that I can work with, right? So I was looking at this. I had, let's do this. I had this level marked off, minus IFEG. And I was watching to see how price is moving. Now, as you can see right here, there's nothing to work with up here, right? If I go to the 2-minute, there's nothing. If I go to the 3-minute, of course, there's not going to be anything. So I was on the 1-minute. I was really looking at this. My plan was, if I catch a trade around here, I can, take TP on the way down, right around here. So the second this price action starts to close below here, I ended up taking a front run entry, got in, and then immediately started taking TP on the way down. So I took a little bit of TP immediately around here, and then I took some more TP closer to the bottom. Of course, price starts to go even lower. I think I had hit some sort of a daily goal or something. I think I had closed off my trade, or I can't remember what I did, but I think I had taken myself out for some reason. But nonetheless, this was a setup that I would normally trade, like I said, off the daily EQ. It's just another example of how I use specific levels, like Asia low, like overnight session highs and lows, previous daily high and low, and then also the daily EQ. Now, sometimes it works for me, and sometimes it works against me. So that was an example where I used the daily EQ to short, and it worked. I think there's other examples I can use where it doesn't work, but I can't find one right now. But that's okay. Let's move on to the next topic of conversation, because someone wanted to know about Bitcoin, and then someone also wanted me to tape read. So let's just go back to current price action, and let's just observe what's happening. So how would I tape read all this stuff? Well, it's the same way I trade day in, day out. You know, I mark my levels, right? There's an H4 sell side level here. You know, we're below the daily EQ, so I would be looking for longs. Move to the hourly. Maybe there's some more market structure that can help us determine key levels to work with. This level right here comes to mind. And then anything around here is not anything I would use personally. So it's just what we're seeing here. If I go to the 50-minute, we can then start to tighten up some levels in case, you know, previous daily high or previous daily low aligns with it, but we can see previous daily lows way over here. There's nothing else really aligning with what's happening. So I would just go back to the 1 minute time frame. And the problem now for me with this is that there really isn't much to do. Okay, and this is a big thing about trading that I'm not sure if like where everyone is in their journey. But what do I mean by this? What I mean is that we can't be overly ambitious hunting for trades for the sake of taking trades. Now, if you're taking eval trades and trying different things, that's very different than, you know, if you have one funded account or 5 or 10 or 15, 20, 30 funded accounts. It doesn't matter, right? If you have anything funded, you're going to be very, very cautious with the setups you take. So for me, if I'm looking at all of this right now, you know, I would be inherently bullish because we're under the daily EQ. But if I'm looking at the levels of interest, we have a level here, but there's so much price action has happened underneath this level, but above this hourly sell side liquidity level. What does that mean? Well, it means that price is in no man's land. It's a no trade zone. So until price starts to do something for me in terms of it being a long, like I would need some sort of a sweep on the hourly level right here. So I'm going to just set an alert, and this is what I would suggest for other people to do too. When you show up to your charts and you put out your lines, you mark it up, set alerts so you're not stuck just looking at what price is doing, because it doesn't matter what price does here. All I care about is what does it do down here, right? So I'll keep that no man's land here so we remember. I'm going to go back to the hourly, and the reason I'm going to go back to the hourly is I just want to see if I missed anything, okay? Because sometimes I miss things, right? And what do I miss? Well, there could be swing points that I miss. And I can look at it right now, and there actually is a swing point I missed. Why is it a swing point that I missed? There's one right here. This is a hourly internal sell side liquidity level. So let's just go back and see what price did when it swept that level. So you can see right here, still kind of in lunchtime. I guess 1:30ish is where we start to see more of the volume kick in. But if I'm looking at this in terms of like setups and things like that, what do I see? So this is lunchtime, no trade zones in the lunchtime. I would be probably wanting to wait for 1:30ish or so. So if we wait for about 1:30 or so, we start getting into this area. And what's interesting is there is some sort of an FVG here, but you know, once again, it's the price action that I don't really like. Like I don't like this type of reaction. if I go back to my checklist, are we seeing an instant reaction? This is not I mean, we are reacting from here, but it's not really an instant reaction, right? Maybe this is, but if we go back to the 2-minute, and okay, you're probably looking at this right here. Let's just mark that off. Okay, so yeah, there's an IFEG here, but once again, with IFEGs is you don't want to have your drawn liquidity be unclear. Your drawn liquidity is right here. So the second this starts to confirm, you're already in your drawn liquidity. So this is not good. And the other part too is this is at 1:06, so you're still in lunchtime. It's not safe to trade during lunchtime. If you're going to trade the PM session, like wait till about 1:30ish or so, right? So if we continue moving forward, let's go and mark off 1:30. Okay, so there's 1:30. What's price doing at 1:30? So we haven't sort of reswept anything. And what I would have liked to have seen, like from that trade I took earlier, is we have that sweep, but then price goes up and then creates a swing failure pattern, right? Does something like this, and then goes higher, right? That's this block right here, right? 1, 2, 3, 1, 2, 3. I would have preferred to have seen this like sweep there and then catch that IFEG here. So let's go to the 1-minute time frame for a sec. So all of this is too big. This is better, but once again, we don't get that sweep, so it becomes really risky of trying to force that trade. The other thing too is, like, if we just mark this off as our IFEG, okay, so let's just mark that off, right? Seeing what's happening here, here's 1:30. I don't know. I might not have wanted to use that 2-minute, because is there an instant reaction now? Not really, right? There's a lot of chop happening here. Is there strong momentum? Not really, right? Even on the 2-minute, like that's not really strong momentum, even though price does close here. So even though price does go higher, I don't know. I would have skipped this if this was something I was, wanting to take during the afternoon for whatever reason. I would have just waited. And now, because, obviously that move has played out, we're kind of back to square one, where price is now back into no man's land, and there's nothing to really do now, except just wait. Iman, this is NQ, man. So if we're looking at the hourly, I mean, 1, 2, 3, 4 hours of just price dumping. One thing Matt always talked about, which I liked, was he would always say he would always pose the question: what happens with price action after expansion? One of two things happens. You either get consolidation or you get a retracement. So this is the hourly. There's no telling what price is doing right now. Is it going to stall here? Is it going to sweep lower? If we go to a lower time frame, though, we do see consolidation. And that is much more aligned with some of the things Matt talks about, which is what happens after expansion. Consolidation or retracement. And right now we're getting consolidation. So when we start getting consolidation, here's another thing you can look for, is you can look for extremes of the range. So let's just say something like this. And I'll just mark this, right? Let's just say this is the high. So what does that mean? Well, what that means is you can trade the extremes of the range. And you want to trade those extremes of the range back to the median. So set your range, set your median, which is the EQ. And if we just even study what price did here, look at every sort of extreme. Right? So we already know this is what sets the range. So you get sweep. Price comes back to the equilibrium, decides to go lower. Okay, we got another sweep. Rejects off the equilibrium, comes back again for another sweep. front runs the equilibrium, goes for another sweep. This time breaks through, flips equilibrium into support, goes higher. What does it do? Reject off of the extreme of the range. And what does it do? It goes back to the median, and it actually manipulates the median, and now we're pushing back up to the extreme of the range. So this is another type of trading all in and of itself, where if you are trading consolidation ranges and you can start to see that they are holding, you can then start to identify ways to trade from those extremes. How you decide to get into those trades, there can be many different ways to do it. I'm not going to try to tell you what way to do it. I do trade IFEGs, so for me, I would be looking for an IFEG, but it would be very risky. I think trying to trade like a unicorn here doesn't really work, because by the time the unicorn sets up, the move is already made just because the range is so small. So this could even be some sort of a scalping opportunity where you're just waiting for some sort of a change in state of delivery, perhaps. What does that mean? Well, in this situation right here, you have a CISD that forms right here, right? But the problem with this is when the candle closes, it's already tagged the EQ, so that's a no-go. This, however, right here, this might work a little bit better, right? Because price closes here, you still have room to go to the EQ. You could take a short from here and then just aggressively take TP, right? And this is just some sort of a scalping exercise, we could say right now. Doesn't really work here, but you do get an order block. So you could play off the order block on this sweep right here, right? There's an order block that forms right here. So there's many different ways to try to take trades, right? You have an order block right here, retraces, and look at where price reacts from. Once again, it's reacting off the EQ of the range. The range is our order block, like clockwork. It's pretty good. And now we're back up here, so we can watch what price is doing in no man's land for now, for sure. See how it reacts. And we can also talk about BTC. What time are we at? 2:21. Okay, so let's talk about Bitcoin. Here is the Bitcoin futures chart. Okay, so the question that was asked is, what are my thoughts on Bitcoin on the long term? Maybe where the bottom will form, in my opinion. So there's a couple ways to go about this. The first way is understanding the 4-year cycle theory. Okay. Now this is a little bit complicated if you know nothing about the 4-year cycle theory. It's quite okay. Let me just go to my template. Here we go. Turn this off. Let me turn this off. And here's the halving theory. Okay, so you'll notice I have this chart up. What does it mean? I've showed this before. Basically, the 4-year cycle theory is that once the Bitcoin halving occurs, which is every 4 years, we start to get the bull run, right? After we get the bull run, there's usually a specific amount of time. It's usually like 1,064 days, I think, which is the, I guess, kind of the range that's been used. If you look up 1,064 days Bitcoin, and just on Google, you'll see exactly what I'm talking about. It equates to just under 3 years. But what happens is the top usually gets put in around that time. So this is a pretty cool indicator. I'm not sure if you can find it anymore. It might have been hidden. I have no idea. But it marks off these levels for me. And if you just look at what's happened, right? So in that very, very first cycle, of course, there's not much liquidity. It's very new. We're not going to see, I would never expect to see some sort of pattern at that point, obviously, because there is no pattern. But as the years start going on, we can start seeing patterns emerge. So here's the halving 4 years later. Here's about 1064. The high gets put in literally at the end of 2017, early January 2018. Okay. We'll get to the lows in a sec. Here's the next halving, Bitcoin bull run. 1064 marks the high, November 2021. And then once again, here we are with the halving, 1064, and once again, the top gets put in again. I'm not sure this indicator is available anymore. Last time I checked, it wasn't, because if I hit about script, oh, maybe it is. Maybe it is. Bitcoin halving cycle profit. Just search that up. Super cool indicator. I really, really like it a lot. Maybe it was another indicator I thought that got hidden. Check it out. Just type in Bitcoin halving cycle profit. And then once again, here we are, and price is now dumped and starting to reject. It's doing exactly what it did in the past. So the question now is like, okay, where does a bottom form? So there's two ways to go about this. The first way is, and I just had to preface it by showing you the 4-year cycle theory. The first way is the 4-year cycle theory. Okay, what does that mean? Well, after a top is put in, what usually happens is the low of the bear cycle gets put in about a year later. Okay? So let's go here, 364, the low gets put in, right, from the top. It's not taking in consideration the time frame of the indicator marking like the timeline of when the cycle ends. It's actually using the price action of the top. So the top formed here. About a year later, we get the bottom. Okay? You can see it right there. Let's try it again. This is now October. There you go. So here's the high, November the 8th, 2021. And here is 364 right there. Once again, you're literally buying the bottom 1 year later. You can avoid all of this and just wait. Okay, so now what does that mean for where we are right now? Well, if history is going to repeat itself again, right, then that means 364 is right there. Okay, so two ways to go about this. One is time. We're looking at like September, end of September, early October. It's about 364. That's a good time to buy. I think the one that you shared in the chat is the one I would use, and is the one I'm using. I think that's the same one. Kevin Swanson. There he is. So it's the same one. So 1 year later puts us to the end of September, early October. That's one way to go about trying to figure out when the bottom is using time analysis. Okay? I showed you, this is not me creating anything. This is just me showing you time and showing you 2 cycles in a row where this has happened. Maybe 3 cycles in a row, actually. Let's go back to this top for a sec. This is the very first top. So this was actually 406 days, and then it went for another low in 600 days. Where was 364? 364 was about here. So, I mean, pretty close. 406, 364, another 40 days. But the thing that I would say in this situation is you dollar cost average into your entry if you're trying to buy Bitcoin at a low price. Okay? So now that we understand the time element, let's move on to the next part, which is using ICT to our benefit. Right? We learn all this knowledge of ICT and we trade with it with futures. Why it still works the same with Bitcoin. It still works the same. What do I mean by that? Well, let me show you. Let me go here. Let me go to the weekly time frame, and I'll show you what I mean. So when we talk about ICT concepts, well, ICT concepts are, liquidity sweeps, right? There's another one here. Another one there, right? So whenever we see liquidity sweep like this, aka turtle soup, you should already have some sort of a red flag going off, right? The alarm's got to go off at that point. Even on the lows, like this. you see something like this. This is a clue. Happens here too, right here, and inside of an FVG. So some people trade off these types of concepts where you have an FVG with a liquidity sweep and maybe there's SMT. There's your confluence, right? So another piece of information, like I just mentioned with the FVGs, is like right here you have a bearish FVG, you have a liquidity sweep, and you can probably see it already there. You have SMT with ETH. These are ICT concepts that we can use to our advantage. So we now know the time element, which is September, early October 2026. Let's just mark it about here, okay? But how low will price go? So the other thing now is when we look in the previous cycles, price goes down about 70% roughly or so. Where are we at right now? 52. So we're 70. 70 is about here. Takes us just below 40K. Is that going to happen? I have no idea. That part, no one knows. But what I do know is, once again, using higher time frame levels of interest, I know that we have levels all the way down here. All this LRLR, for example, is just primed to be taken out, right? Oh, I don't have it written in. Text, center, bottom, there. So we got LRLR right here, right? We got a sell side level here. Just quickly put these on the chart. Right? We got a low, we got a low, we got a low. And then we also have another errant low right here. So there's 4 sell side liquidity levels on the weekly time frame. We can see there's plenty of LRLR right here to be taken out. So plenty of reason for Bitcoin to go lower. How low will it go? 70% is here. Well, guess what else is down there? You have another swing point right there. So for me, on my charts, I have all these levels marked off, and I'm just waiting to see what price does at those levels, especially as we get closer to the end of the year. Now, with that being said, what I also wanted to talk about was how overextended things can get. Nothing just goes down forever, and nothing goes up forever. Bitcoin is no different, right? Price went up, price goes down. Price goes up, price goes down. Price goes down, price goes up. Price goes down. Well, guess what? We're in a market maker model right now. We reversed here, first leg of consolidation, and I would expect some other leg of consolidation to occur before some sort of manipulation occurs, like a sweep. And then that's when the reversal happens, and the market maker model now moves to a buy market maker model from a sell. So as price is moving lower at these levels, what I'm actually going to start doing, and what I have been doing, is I've been moving to the lower time frames, like the 4-hour, and just observing what price does. Because as we know, a reversal is going to form on a lower time frame before it shows on the higher time frame. So if we can start using, once again, the concepts of ICT, this could be change of state delivery, right? Let's take a look at the change of state delivery. Where is it? Well, it's right here. Is that convincing? As a valid CISD? That small little break right there after it rejected? Kind of interesting, right? It just happens to reject off the CISD, right? Now we're going back down again. It's a good chance this thing gets swept one more time, and then maybe we'll start seeing a cleaner reversal. So I'm looking at the 4-hour to find out if we're going to get sort of like a dead cat bounce. It's going to show on the lower time frame first, like I said. But until that happens, I just keep looking at the higher time frame and just waiting for levels to get tagged. I think, once again, that if we're looking at 70%, that's taking us just below 40K. I don't think anyone's really ready for that, to be honest with you. I think that people are still in denial that the bull market's still on. I don't understand how you could like think that we're in a bull market when you have this happening. If we use extensions, like Mr. Coco just said, let's see, should we use this one? Okay, right there, -4, right? That's what he said. There you go. And what are we measuring it off of? Well, we're just measuring it off the breaker block, right? Which is right here. Just make a line here for it. Breaker block. So liquidity sweep, breaker block, not really a unicorn here, but it's a breaker block, and then here's -4. So one thing Matt has often talked to us about when it comes to these standard deviations is -2 to -2.5 is a massive target, of course. But if we start getting acceptance below this range, we should then start to anticipate a move to the -4 to -4.5. Doesn't mean it's going to go to -4.5, which is under 30K. But anything's possible. No one knows anything. No one has a crystal ball in that sense. But if we use strict TA, we can clearly see reasons why price is not hit the bottom yet. So if I'm going to dollar cost average entry into a Bitcoin position, once again, I'm looking for prices to go significantly lower around this time. So wherever price is around this time is when I'll start dollar cost averaging. So if price is, has done one of these and then starts consolidating like this, maybe it goes lower, right? We don't know where that bottom is going to be. But let's just say, actually, you know what? Let me show it like this. Let's say price does some sort of a dead cat bounce, fills these gaps or some of these gaps. Okay. So we go up something like this. Maybe it's a 50% EQ run. Let's mark 50%. So maybe price is going to bounce off the 50 here, which is around, this is showing around 80K. Maybe it goes higher. I have no idea. But then price starts to go lower, right? So like I was saying to you before, I do expect price to crash again. And then I do think it's going to have like some serious consolidation. And then a final leg of manipulation. And then like a final sweep, so to speak, right? So you could just get endless consolidation and then one level sweep. And then it does something like this, right? And then it starts moving higher. Something like this is possible. Is it going to happen? I don't know. And the reason I'm showing it to you like this is that if you just go back to the previous cycle and we just measure the top to the bottom, 77.59%. But once again, it's that same idea I just showed you there. Here's a swing point, right? Here's a weekly SSSL, weekly sell side liquidity. Forget the FEGs and all that stuff for a sec. Just look at the level here, right? It's doing exactly this, right? Price dumps, consolidates, final sweep, and then you have the reclaim. And it literally looks like a support and resistance bump right at that point, because you do have the change of state delivery forming right there, right here. Here's your CISD. So for me, I will be looking for things like this. The time, which is the end of the year. I'll be looking for key weekly sell-side liquidity levels aligned with -4, -4.5 now. And then I'll be looking for something like this. Consolidation after expansion. Consolidation. We talked about what happens after expansion. Consolidation or retracement. If we look at the past, after expansion, here's your retracement. After expansion, here's your consolidation. But when you get consolidation like this, you got to look for that manipulation to occur, the sweep, the turtle soup. Because once that turtle soup happens, it gives us a clue as to where the CISD is. And then once we see the CISD get confirmed like this, the rest is history. And you've literally bought the bottom. You've dollar cost averaged into the bottom. Over the course of, 3/4 of a year. Right? Is price going to do exactly the same thing? Who knows? They often say price doesn't repeat, it rhymes. So look for some sort of rhyming to occur. Hope that answers your question there, Mr. Coco. Kind of did an in-depth discussion about it. If we look at what's happening back on the NQ chart where we last left off, we left off around here at 224, and this was about 2 o'clock. So remember we talked about the extremes of the range? Look at what it did. Once again, sweep, target the median of the range. Now we're doing it again. Sweep. But is it going to hold this time? No one knows. There was SMT here too. But still, for me, and if I'm looking for longs, it's still in no man's land, right? I mean, you could take little, scalps and things like that off these levels, right? Like off this level, like there's an IFG here, for example, and just trade it to the top. You can do the same thing here. There's an IFG here and take it to the top, or do the opposite. Those are obviously things you can do. They're a little more high risk. Maybe you do it with an eval for practice, right? Maybe you just take $100 trades. So not much happening there. We talked about Bitcoin, and the last thing I'm going to talk about is USDT dominance. This is tethered dominance. Just a quick little lesson on this. We did touch upon this last time. What is tethered dominance? Tethered dominance is in crypto. When money moves out of altcoins and Bitcoin, it moves into presumably Tether. Okay, Tether is USDT. That's the ticker symbol, right? Now Tether is banned in Canada. It's banned in other places. So in those places, like my country, we would be cashing out to if I was holding Bitcoin and I want to sell, I would be selling it to CAD, or maybe I'm selling it to USD, but I'd be selling it to fiat, not to Tether. But Tether is still important because it holds a massive market cap with the crypto space, within the crypto space. So what that means is when Tether starts to increase in price, or a percentage, right? Because it's a market cap, or a dominance chart, I should say, not a market cap. This chart's a dominance chart. So when the dominance of USDT starts to increase, that's telling us that money is moving out of crypto and into USDT. They have an inverse correlation. Think of it like the dollar and, NQ, for example. So I still find ICT Concepts works very well, even with something like this. So what I'm watching out for right now, and this is the monthly time frame. I'll just mark that line there, and I'll mark another line here, and I'll mark another line here. This line, I'll just make it a dashed line just because there's another swing point right above it. So what does that mean? It means I'm looking to see if there's going to be some sort of rejection. Okay, I already showed you the Bitcoin chart that we are moving off of swing lows on the weekly. Let me just get rid of all this for 2 seconds. Let me go to the monthly. So if we go to the monthly, we got an FEG here, super small. Oops, this is not dark enough. Let's turn this. Okay, so we got an FEG there. The price is moving into. And then we also have a monthly sell side level right here. And we'll just mark that off like that. So if price does go lower, well, there is other levels that we could hit, like we talked about, right? But I mean, this thing has to have some sort of dead cat bounce. I just can't see this thing just going straight down. Because like I said, things don't just go straight down, right? Even like this. Goes down, dead cat bounce, and then finishes the move. I'm looking for this to happen. How high is it going to go? I have no idea. But if it's any, if history is going to repeat, that's about a 46% move. If this is the low here, from about here, 46% takes us around the high 80s, right? So maybe we get a move back up here, does this, and then the fallout. So I'm looking for a bounce. I mean, I feel like we're hitting all of these key sell side levels of liquidity. USDT, on the other hand, is hitting the opposing side, right? It's inverse. It's hitting buy side level liquidity on the monthly. Can it go a little higher? Of course. But if this does go higher and sweep this level, then if we go back to Bitcoin, we can then start to anticipate potentially more levels get swept somewhere in here, right? Whether they're monthly levels, I don't know if it'll be this level yet, or it could be those weekly levels that I had shown you, right here, this LRLR, somewhere in this pocket. So if USDT dominance goes a little bit higher, I could then anticipate this to sweep this level one more time, for example, maybe make another low here and then sweep higher, creates the dead cat bounce. So this is what I'm using. And just to show you in terms of like a visual representation, and then we'll stop there. Let me pull up the BTC USDT chart. Or sorry, the BTC USD chart. Let's pull that up. The all-time history index. And I'm just going to pin this to the right. And I'm going to just change. Actually, you know what? I won't change anything. I'll just leave it like this. And then I'll show you the comparison. So just to highlight what I'm talking about. Dominance increases. This went lower. Dominance decreases. BTC goes higher. Dominance increases. BTC goes lower. Dominance decreases. BTC goes higher. And then here you can see dominance starts to massively move higher. That's bear market territory. And look at what BTC does. It just crashes, right? And then as we start seeing some sort of recovery here, there's more of a correlation at this point here and here. This looks more like consolidation, but as price starts to go higher, we do get more of a dip there. But once again, here's a more clear, impulsive move lower, and Bitcoin goes the opposite way, goes higher, right? Now, here's that impulse higher, and Bitcoin's going lower. So it's not going to be all up or down nonstop. But what I'm looking for now is that inverse correlation, and I'm finding it with Tether, and I'm finding it with Bitcoin right now. So I do think a dead cat bounce is in the cards. No one has a crystal ball to know the time of when it will, decide to go higher. People use full moons. People use Mercury retrograde and other sorts of things like that. Me personally, I'm not using any of that stuff. I'm just looking at a chart and looking at a level and then zooming into the lower time frame and observing what it's doing on the lower time frame. So if I'm on the monthly here, I'm going to look at the hourly. I'm going to look at the daily. Right? And until I start seeing some sort of a reversal here, this thing is just going to keep showing me nothing, right? It's just going to keep showing me no confirmation of a reversal. So maybe this does sweep this one more time, and then we start seeing more of what we see usually with like NQ on a lower time frame, right? Where we see unicorns, we see IFEGs, we see turtle soup, we see order blocks, OTE, right? These types of lower time frame entry functions. It's fractal. It works everywhere, right? It doesn't mean it's going to show everywhere all the time, but these are things we can kind of pull from the cloud, so to speak, to help us understand and give us a better picture of when we might start to see that reversal form. So I hope that sheds some light into the crypto space. I came from the crypto world, so I spent a lot of time looking at fractals, which I don't really think are valuable anymore. But I did learn a lot about dominance and just the inverse correlation of things, and also just keeping things simple. That's what I learned since being in Unicorn University, is just learning how to simplify, right? And then I'm trying to apply more of that now with crypto, which is simplifying my approach, using specific things now, and not, clouding my judgment with, confusion with a massive amount of other types of charts and other metrics and on-chain, and, what is this person saying on Twitter, and what fundamental things happening. Like, I'm not really focusing too much on a lot of that, a lot of the fat, so to speak. I put that in quotes. I'm trimming the fat. Just going to the meat and the bones. And to me, the meat and the bones are the dominance chart for Tether, obviously the price of Bitcoin, and then using the 4-year cycle theory as my goalpost. Oh, I appreciate that, man. Thanks, Hard Bowler. I appreciate that, man. That's really kind of you to say. So yeah, this is, I kind of had some of this planned, but a lot of this is just me freestyling with y'all, and I appreciate everyone's time today. I've been going for almost 2 hours again. I think I need a raise. With that being said, I hope everybody has a great time with their day. I will be back tomorrow for another live stream. So, we'll see how NQ trades, and then we'll do it all over again. Yeah, if anyone has any final questions, drop it in the chat. No problem, brother. Take care, man. If not, no stress. We'll be back tomorrow. We can chat tomorrow. Okay. Peace out, everybody. Thanks for your time.